don't let this happen if you plan to buy a home in 2025. Just the other day, I was out previewing homes in North San Antonio, really northwest, far northwest San Antonio. And I happened to come across a home as a foreclosure. And so I'm going to share that home tour with you here momentarily. And you'll hear me take a few guesses as to why this home fell into foreclosure. But it was a super nice house, and I just couldn't understand how this home fell into foreclosure. I did some research after the home tour, and I do have some advice if you're planning to buy a home in 2025. So I'll go ahead and get to the video as you can see the house and see how nice it was. And then I'll share with you 3 tips on buying a home in 2025 that'll help you avoid this foreclosure, hopefully down the road, and get you into a house as well. Hey there, folks. We're on the far north side of San Antonio, and I want to show you this house. I'm going to post this on all my channels because I think this is actually a pretty sad situation. I don't know what the actual reason is that this home went into foreclosure, but I'm going to show you this house. This is a great house. It's one of the cleanest foreclosures I have ever seen in recent history anyways. I've seen some nice ones in the past, but 2025, this is definitely top cleanliness, condition, everything in a foreclosure that you could ask for. And actually, another sadder part of this, possibly, I don't know what the circumstances are for the sellers to have this house go into foreclosure, but sad thing is they had a great interest rate on this house. They had a 3% interest rate on this house. I looked it up, and my goodness, it just makes me sad. I don't see any history of this house being on the market. Doesn't look like they tried to sell it. I'll go verify that when I get back to the office, but this house is gorgeous. I don't see how this would last, even with the high interest rates now. But the really unfortunate thing about this situation here is that they could have sold this house if they were able. They could have sold this house with the 3% interest rates. Comment below that you would love to get into a house like this with a 3% interest rate. It's called mortgage assumption. I talk about it all the time on my channel. The little wrinkle that government-backed loans have available, FHA, VA, SDA loans. If you're a seller, okay, and you're struggling to sell or whatnot, and you have a low interest rate, you should be marketing that thing along with the sale of your house. Okay, you should absolutely be marketing that. It will stop the scroll for people looking in your area if they see what kind of interest rate is available, even if they ultimately can't do it because they don't have either the down payment or they don't want to borrow for the equity that you've built up in a house. You should at least be marketing that in your listing. Okay, I don't see that enough. I've talked to some other agents, and agents largely don't understand the assumption process. So if you have questions about the assumption process, give me a call because I have all the training. I know what I'm doing. Assumptions are a great way to capture low interest rates that have already been established in a home with a lender. There's a lot of advantages to it. You don't have to have a new appraisal. You don't have to go through all that lender required repairs, nonsense. You can take over payments for a seller that can't continue with the house or just wants to move in general. It doesn't have to be that they're in distress. In fact, you can't be behind in payments and do an assumption. That is one wrinkle, but you can sell your house and your mortgage at the same time. Okay, so you're missing out on a marketing opportunity if you're not selling your house with your mortgage and you have one of those red hot interest rates from 2019 through 2022, 3%, 3.5%, whatever it is. Okay. Right now we're sitting at 7%. So again, how many of you would love to get into a house for less than today's mortgage rate? Okay, that's the big pain right now in the market. If you have questions about that process, just give me a call, text. We can discuss the situation. And a lot of these homes, these low mortgage rates, are on the market. They're not currently being marketed as assumptions, which I think is just it's a shame. Okay, but there's also a bunch of houses off market. You can purchase these homes from sellers that think they don't have a way out. They think they don't have a way to market their home. They think they don't have a way to find a home with an affordable rate. Okay, they just haven't been informed yet. So we can reach those sellers as well. Again, this is just astonishing how clean this house really is. It has everything that a home that sells fast would have. It has the wood floors, has tile in the wet areas. The paint is immaculate. I am, if not for, all the phone jacks and cable jacks and everything, I would question if anyone actually lived here. It's really that in that good of shape. Granite countertops. Everybody wants granite countertops still. Very nice. Paneled doors. Got this nifty gate here. So if you've got a kiddo or a dog that you're trying to keep separate from going upstairs, got that there. Carpet's in decent shape. Okay, it's not terrible. You can work with that. Get Stanley Steamer out here or somebody else. Loft area is very expansive. You clear downstairs there. Okay, still part of all the action in this house. I bring my flashlight to these foreclosed zone. There's no tower here. Second bathroom. Secondary bedrooms. So this would definitely be a house that is good for older kids. If you have older kids, you don't need to be upstairs with them. This would be a great house. Or if you have somebody that has mobility issues and you don't mind giving up the master, they can stay downstairs. You can age in place in this home. Great house. Don't really have a second master bedroom, but 3 bedrooms upstairs, 1 master downstairs. Huge loft area here. Game room, however you want to use it. Little covered patio here. Shed. The roof looks like it's in great shape. I just can't see anything wrong with this house. Somebody really cared for it too. They added solar screens to the back. Those are your energy saving solar screens. About a 3/4 brick house. Anyway, if you have any questions, give me a call. 210-260-6617. I'll see you guys around. As you can see, this was a very nice house. It still is. It is a HUD foreclosure. unfortunately, as you can see, the house is in move-in condition, is move-in ready. I could see very little sign that someone had lived in there at all. They were very clean. They were very on top of keeping the house maintained. It's just an unfortunate situation. So getting right into it, 3 different things that I can suggest if you're planning to buy a home in 2025, particularly in a newer area, if there's a lot of home builders in the area. So the first thing I would suggest if you're buying a home in the area, whether your neighborhood is newer and almost complete or completed, is that you want to plan to hold the property longer. Folks are staying in their homes longer these days. The average right now is 9 years. If you're planning on buying a home and then selling it 2 or 3 years later for a profit, please don't do that. Okay, unless you are an investor and you are seasoned, you have the knowledge of the market and what the buy and hold strategies are. Do not plan on buying and selling a home within 2 or 3 years. Okay, I don't think that was the case with this house. I think that is more of a family situation that happened. It was an FHA loan. That's how it ended up being a HUD foreclosure. But plan on holding the property longer. Real estate is a long-term play in general. It's not a buy and sell asset you can do overnight. And again, unless you're a seasoned investor. So plan on holding the property longer. The longer you hold it, the better. Number 2 is to be cautious in or around new home communities. The thing with new home communities is that you're competing against the builder the moment you close on the house. Okay, if you are not planning on holding that property for 6 to 9 years, then you are potentially going to be turning around and competing directly against the home builder. It's very difficult to compete against the home builder. It's like buying a brand new car, driving off the lot, and then turning around a week or 2 later and parking the car next to the new car lot and trying to sell it for, full price. You're just not going to be able to compete with the builder. They're going to offer too many incentives. They're going to have the full warranty on the property that they're conveying. And it's very difficult to compete against that. Number 2 is another part of number 2 is you want to ask questions, okay? Along with being cautious, you want to ask these questions. You want to ask, how many homes have been built in the neighborhood? How many homes are going to be built in the neighborhood? And when do they start building? This is going to give you a reasonable estimation as to what the rate is of the sales. Okay, how long are they going to be there? How long are they planning on being in the community? How many other builders are in the community? And then you want to ask yourself and/or your realtor, are there any plans for development around that community? Okay, are there any more home builders? Okay, going up against the home builder in your neighborhood is pretty bad. But if you're going up against home builders in competing neighborhoods, that can be almost just as bad. Okay, it's very difficult, again, to market your property against a home builder's property. It's just very difficult. And then number 3, finally, is to formulate an exit strategy. I think on this home, they did a great job trying to get it sold. They only tried to market it for 90 days, which was just not going to be enough time. They put the house up. I think it was kind of an emergency situation, thinking about it. They put the house up for sale in July, towards the end of the year, when really the activity's winding down. They did advertise the assumable mortgage. It had a 3% interest rate on the property, so someone could have came in, took over that mortgage payment. The sellers would have got nothing in this situation, but the buyers would have had a 3% rate. And I believe at that time, rates had already shot up to 7%. So they did have some sort of strategy there, but I don't think they gave it long enough. I think they should have kept it on the market much longer in that situation, and because of all the competition with the builders. But you also want to ask what the rent rate is for your property. If you were to turn around and rent your property out that you're purchasing today, what would the rent rate be on that property? If you can cover your rent on that property, or cover your mortgage payment with rent on that property, what is it going to be? Are you going to end up having to come out of pocket with with the rent payment that you're receiving in order to keep the mortgage from going into default? You got to answer that question. Okay. So that could be the case. That could be the case that you have to do that. So if you're okay with that, and you know that, then go ahead and buy the property. But if you're not okay with that, that scenario, then definitely don't want to buy the property. Is a short sale something that you're prepared to do if necessary? And that is selling the property for less than it's worth with the bank's permission. Okay. That is a strategy one day that's going to come back more and more. I see a few of them here and there. They're not very popular yet because there's not a ton of them yet, but it is something that's going to come right along with an increase in the number of foreclosures we see. We see that already. It's not an astronomical amount, but we'll start seeing more short sales in the future. But is that something that you're prepared to go along with if you have to exit the property? And then, of course, down payment. The more down payment that you're able to make up front, the more wiggle room you have at the end of your ownership, whether that is because you're going through a divorce, because you lost a job or something of that nature. If you're able to put 20% down, it's going to save you from making the mortgage insurance premium. Okay, that's a mortgage insurance policy that you're paying for to protect the lender against you defaulting. So if you're able to put 20% down, and it's not going to tie you up too much, go ahead and do that, because it's basically giving yourself an insurance policy to be able to sell the property without going belly up and having to have a foreclosure and then not being able to purchase the property for so many years. That is a good strategy. It's a great strategy if you can afford it. Now, if you don't put 20% down, obviously you've got to be sure you want to be in that property. Are you going to be able to stay in that property for at least 6-9 years and let it appreciate in value so that you can exit the property? But the only surefire way really is to have that 20% down. That gives you that cushion, okay, for market fluctuations in order to get out of the property. So hopefully this video was informative for you and you got something out of it. If so, hit the like button and of course, reach out to me if you have any further questions.